Welcome to the Deep Dive, the show where we try to cut through all the noise and get you the insights that matter. Today, September 3rd, 2025, we're plunging right into the often volatile, always fascinating world of cryptocurrency. Our mission, really, is to distill the most important nuggets from market reports, regulations, tech breakthroughs, everything we can find, basically. We want you to walk away feeling genuinely well-informed. And today's landscape, it's this really striking blend of cautious recovery, some exciting innovation, but also, a necessary dose of vigilance.
Absolutely. And it's so vital to see this beyond just the numbers on a chart, the daily price swings. What we're really looking at are the underlying forces, the kind of tectonic plates shifting underneath. Everything from global macroeconomic policies, the big picture stuff, right down to specific groundbreaking blockchain developments. We're truly at a critical juncture, I think, where all these diverse trends are sort of converging. Understanding these forces is key to making sense of what's next.
Okay, so to really navigate this unfolding story, let's get a precise reading first. What's the immediate snapshot? What's the crypto market looking like right on this September 3rd? And what contrasts pop out when we look closer?
Well, our sources point to a slight recovery in some major assets. That's the headline. Bitcoin, BTC, it's actually back above that significant $111,000 mark. Pretty impressive after a tough August.
Yeah, 111K. That's definitely a level people watch. And Ethereum.
ETH is showing some decent stability too, holding around $4,326. It seems to be finding its footing there.
Okay, but that's just part of the picture, right? Because here's where it gets kind of wild.
Yeah.
We see these contrasting stories playing out simultaneously, like an altcoin like Mimcore. It's seeing a really significant surge today, leading the pack almost.
Right, a real outlier in terms of gains.
But then on the complete flip side, you have this brand new token, World Liberty Financial, WLFI. It launched and immediately struggled, dropped, 14% on day one? And there are some pretty serious scam concerns swirling around it.
Exactly. It's that kind of dizzying contrast. You've got the established players showing some strength, speculative surges, and then immediate problems with new launches. It really demands constant attention.
And meanwhile, the bigger trends are still there, right?
Yeah.
That steady drumbeat of institutional capital flowing into the crypto market, especially into ETH and Bitcoin. But also, always lurking, are the regulatory risks and, those persistent reports of scams popping up in the Web3 space. It never stops.
What's fascinating, I think, is how these seemingly disconnected movements, stability of the giants, the crazy rise of some altcoins, the immediate failure of others, they're all actually interconnected. It paints this picture of a market that's just incredibly dynamic, almost contradictory sometimes. This snapshot really underlines why you can't just glance at headlines. You have to understand the complex web of forces driving everything that push and pull between real innovation, speculation, investor mood, and frankly, the very real dangers out there.
Okay, so let's peel back those layers then. As we dig deeper, what really stands out from the analysis? What would you say are the biggest forces shaping this market right now? Both the obvious ones and maybe some hiding beneath the surface.
Well, let's start with the big one, what we could call the macroeconomic shadow, specifically the Federal Reserve's influence. It's huge. The FOMC, that's the Fed's main policymaking group, they decided back on July 30th, 2025, to keep the federal funds rate target range where it was at 4.14 to 4.12%.
Okay, holding steady then.
Right. But here's the crucial part. The market right now is already pricing in a September rate cut. They're anticipating it.
Okay, so the market thinks the Fed's going to ease up soon. Why is that expectation so important for crypto specifically?
Well, Fed decisions are arguably the most important macro factor out there. They don't just influence traditional currency rates, they indirectly sway, pretty much all risk assets, and crypto definitely falls into that category. A rate cut usually signals a looser monetary environment, which tends to make riskier investments look more attractive.
Right, cheaper money looking for higher returns. But what if the market's wrong? What if they don't cut in September?
That's the key risk. If that expectation doesn't pan out, if the Fed holds firm or even sounds hawkish, we could see a pretty swift negative reaction. We'd likely see the US dollar index, the DXY, strengthen. And a stronger dollar historically puts pressure on crypto prices. Investors might pull back from volatile assets.
Makes perfect sense. Okay, so macro is huge. Then you mentioned institutions. Let's talk about the institutional tsunami, as you called it. Big money getting involved.
Yeah, and we're seeing some really significant moves. MicroStrategy, sometimes just called Strategy, and reports they bought again, another 4,408 Bitcoin, worth about $450 million.
Wow. What does that bring their total to now? It must be massive.
It is. Their total Bitcoin holdings are now something like 636,505 BTC, valued at, get this, approximately $70 billion.
$70 billion.
Yeah,
That's not just dipping a toe in anymore. That's a full-on corporate strategy built around Bitcoin.
exactly. It's a high-stakes experiment, really. And it forces you to ask, like you said, is this visionary? Will others follow? Or is it a huge concentration risk if the market turns south?
And it's not just MicroStrategy, right? Other institutions are active too.
Definitely. We're seeing reports about Bitmine immersion and the Ether machine increasing their already substantial ETH holdings. Plus, Gemini is apparently making plans for an IPO. These aren't just isolated buys. It's a clear signal, I think, of increasing acceptance and trust of digital assets by institutions. It really reinforces that long-term growth potential narrative.
It lends legitimacy for sure.
It does. When major players are involved, planning IPOs, holding billions, it adds a layer of stability, or at least perceived stability, and it's a real-world stress test for how these assets fit into traditional finance.
Okay, so big money is in, which is a powerful endorsement, but it inevitably shines a brighter light on the challenges, doesn't it? Like, how do you balance this innovation with security and clear rules? Which brings us to the regulatory tightrope and tech leaps. Let's start with the risks, the regulatory side.
Yeah, the EU market watchdog just put out a warning. They're concerned about investor misunderstanding, particularly around tokenized stocks. They're pushing for more protective measures urgently.
And we see why, right? With things like that WLFI situation.
Yeah.
You mentioned an EIP 7702 classic exploit. What exactly is that for listeners who might not know?
Right, so the EIP 7702 classic exploit, it refers to a specific known vulnerability pattern. It's often seen with certain Ethereum improvement proposals, EIPs, and relates to how some smart contracts handle the delegation of rights over assets. Basically, it's a way to manipulate the contract code. And unfortunately, we've seen this kind of exploit before. It really highlights the need for much better security audits before launch.
So known vulnerabilities still being exploited, that's concerning.
It is, and then you have simpler things, like a Discord try my game scam mentioned in reports. Still damaging, still losing people money. It all just underscores this critical need for clear regulatory frameworks and investor protection. You need rules of the road.
Absolutely. But then, on the other side of that tightrope, you have the sheer pace of innovation, the tech leaps.
Exactly, and some of the advancements are, frankly, breathtaking. We're seeing Bitcoin's BRC 2.0 token protocol gain traction. That's a new standard bringing EVM-style smart contracts, the kind Ethereum uses, onto the Bitcoin blockchain.
That sounds like a big deal for Bitcoin, making it more than just digital gold.
Potentially, yes.
Yeah.
It means Bitcoin, which has traditionally been more about storing value, could now host complex decentralized apps, DeFi, NFTs, that sort of thing.
Yeah.
Much more like Ethereum. It opens up possibilities. And we also have the Somnia mainnet launching, which is another new platform for Web3 development, plus the deployment of something called Trusted Smart Chain for real-world assets, RWAs.
RWA is real-world assets. That's bringing things like property or commodities onto the blockchain, right?
Precisely. Tokenizing tangible assets. These innovations are opening up entirely new use cases, new markets. So the market's central challenge, really, is how do you balance that incredibly rapid technological expansion with the frameworks needed to ensure security and trust for everyone involved, from small investors to massive institutions?
Right, because without that balance, the promise kind of falls apart.
It risks falling apart, yeah. You need both innovation and guardrails.
That's a really clear way to put it. Okay, so bringing this all together, what does it mean for the immediate future, say the next 24, 48 hours? And maybe more importantly, what are the longer-term trends we should really be tracking in the weeks and months ahead?
Okay, immediate outlook. For Bitcoin BTC, the expectation is it'll probably fluctuate around that $111,000 level. Could be some selling pressure if there's no strong positive news catalyst. Short-term traders, they're probably watching the $107,000 mark as a key support level. If it breaks below that, could see further downside.
And Ethereum?
ETH is looking a bit more stable, anticipated to maintain a slight upward trend or just stability, especially if that institutional money keeps trickling in. And good news on the tech side for ETH, remember the Holaski testnet closure. Seems like it had no significant negative impact. So that's a relief for the network. Okay, now let's do that altcoin roundup. This is where things get really selective, as you said. Who are the potential winners and losers right now? Well, a couple of categories seem to be benefiting. AI-related altcoins are getting some buzz, apparently fueled by attention from the recent SKO Summit discussions on AI. RWA projects, real-world asset projects, are also looking interesting. thanks to things like that trusted smart chain deployment and Kraken offering tokenized stocks.
So AI and RWAs are hot themes. What else?
Institution-backed projects seem favored. Think Solana, with its upcoming Alpenglow upgrade that focuses on scaling and speed. There's talk it could potentially boost SOL towards $250. Or Hedera, which seems to be holding support around $0.21. And of course, Memecore, our earlier example, is still surging on hype and community momentum.
That highlights the narrative power, doesn't it, even if it's risky?
Absolutely. Narrative is a huge driver in crypto, for better or worse.
Yeah.
But on the flip side, you have those under pressure. We mentioned World Liberty Financial, WLFI, already down 14% on launch due to those scam fears. That highlights the risk of new unproven tokens.
And technical issues matter too, right?
Big time. Look at Starknet. Reports say it faced its second outage in just 2 months. That kind of reliability problem is a major red flag, especially for projects wanting serious applications built on them. And even XRP, despite some whale accumulation, is apparently still in a downtrend, with support at $2.70 looking vulnerable. So yeah, it's a very selective market right now.
Okay, that's the short term. Shifting focus now to the longer view, weeks to months out. What are the big trajectories? Regulation seems key.
Definitely. Expect regulatory maturation to be a major theme. In the U.S., Congress is likely to prioritize that crypto market structure legislation. Yeah. We should finally get some legal clarity, which is needed, but it could also bring new restrictions, new compliance burdens.
And it's not just the U.S., right? It's global.
It's global. We see the EU warnings about investor protection. We see Singapore focusing on fostering innovation, but within clear rules, not just regulating for regulation's sake.
Right.
The overall trend seems to be towards more favorable environments for compliant projects, while maybe making things tougher for projects operating in gray areas.
Makes sense. And technologically, what grows from here?
I think DeFi and RWA will be major growth areas.
Yeah.
You see the funding pouring in Web3 funding hit $9.6 billion in Q2, which is huge. That money is fueling new solutions. Tokenized stocks on Ethereum, better payment stablecoins, even sophisticated AI agents operating directly on chain. There's this underlying demand for truth, transparency, and opportunity that on-chain finance promises to deliver. That's a powerful driver.
And AI integration, you mentioned that briefly.
Yeah, expect deepening AI integration into crypto. Everything from AI predicting market movements or analyzing social media sentiment to AI actually helping manage DeFi protocols. Of course, this runs alongside the bigger global discussions about AI safety and, the U.S.-China tech competition in AI. But the integration into crypto itself seems inevitable.
So pulling this all together for the long-term market sentiment, what's the vibe?
It's likely to remain a balancing act. Continuous institutional capital flowing into BTC and ETH should reinforce long-term confidence. That provides a strong foundation. However, you'll still have short-term volatility. You'll still have worries about macro factors like inflation and interest rates causing caution. But the overarching long-term trend, despite all the bumps in the road, still seems to be the gradual acceptance and integration of crypto into traditional financial systems. It feels like an unstoppable force, even if the path isn't straight.
It's a foundational shift happening then.
I think so. You've got technological promise and regulatory reality sort of converging, reshaping finance. It's complex, lots of push and pull, but the direction seems set towards a more structured, integrated future.
Okay, this brings up a really important question then. For you, our listener, trying to make sense of all this, how do you navigate this incredibly complex landscape? What should you specifically be keeping an eye on?
That's the crucial question. It's about finding the right signals amidst all the noise.
Right. So let's talk indicators. What should people monitor? Market sentiment seems like a good starting point.
Definitely. Keep an eye on the Fear and Greed Index. It's interesting right now, reports note a contrast, Wall Street showing some excitement, while crypto feels a bit quieter. That divergence is worth watching. Also, social metrics. Tracking community interest, buzz, and sentiment around Bitcoin and major altcoins can give you an early read on shifts in perception.
Okay, sentiment is one thing. What about the actual data on the blockchain itself? On-chain data?
Hugely important for a deeper view. Look at exchange flows, our big players, the whales, moving coins onto or off exchanges. Are we seeing capital shift significantly towards ETH, for example? That tells a story. Bitcoin network hash rate is another key one. It hit an all-time high in August. That's generally bullish. It means the network is secure. Miners are investing heavily, suggesting long-term confidence.
And you mentioned realized capitalization.
Yeah, realized cap, it reached a record high even while the spot price dipped. That basically indicates that long-term holders, people who've held Bitcoin for a while, aren't selling en masse. They're holding strong, which provides a solid base for the price.
Got it. Sentiment on-chain. And then back to the big picture, macroeconomic data.
Can't ignore it. The US dollar index, the DXY, is vital. Like we said, a strong DXY typically pressures crypto. So any news from the Fed, anything that might move the dollar, you need to watch that. Also keep an eye on global bond yields. The reports mentioned UK bond yield fluctuations recently. Shifts in bond markets can signal broader changes in investor risk appetite.
And it gets very specific too, right? Like data that just came out yesterday, September 2nd.
Exactly. Things like the US ISM manufacturing PMI, that's a key gauge of manufacturing health, and Eurozone core CPI, which tells us about inflation trends in Europe. These numbers directly influence what central banks might do next, which feeds right back into crypto sentiment. They aren't just abstract economic points, they're direct market drivers. And with U.S. Congress reconvening, expect potential policy statements too.
Okay, so monitor those key indicators. Now, for some general guidance, and let's be absolutely clear, this is about managing risk. This is not investment advice.
Crucial distinction.
Absolutely. Given the volatility we've discussed, what are some sensible approaches?
First, volatility caution. If you are trading, setting clear stop-loss orders is just fundamental risk management. Protect your downside. Second, prioritize quality and transparency. Maybe focus more on assets with what seem like solid fundamentals, strong communities, and institutional interest with, the BTCs, the ETHs, perhaps top DeFi or RWA projects, rather than chasing highly speculative new altcoins or meme coins with unclear value.
And scams are still a huge issue.
Huge. So scam vigilance is paramount. Remind yourself constantly of the common scam signs that places like investor.gov warn about. Promises of guaranteed high returns with low risk, intense pressure to act immediately, playing on FOMO, fear of missing out, and demands for unusual payment methods. Be skeptical.
Good reminders. What else?
Keep tracking those institutional flows. Reports of major buys are still a decent signal of underlying long-term confidence in the asset class. Also think about diversification and rebalancing. Maybe consider if your portfolio is too concentrated in highly volatile assets. Rebalancing periodically might help mitigate risk and maybe increase exposure to potentially more stable or sustainably growing areas.
And finally, just keep up with the news.
Absolutely. Stay updated on macro news. Keep following announcements from the Fed, inflation reports, employment data. These macro factors will significantly impact crypto market sentiment for the foreseeable future.
It really comes down to discernment, doesn't it?
It does. In a world just drowning in information, understanding which signals actually matter and why they matter, that's your most valuable asset, really. The ability to filter, discern, and adapt will be absolutely key to navigating this space effectively.
That is a powerful thought to leave our listeners with. Wow, what an incredible deep dive into crypto's evolving landscape today. We've really seen, I think, that the market is navigating this very delicate balance. You've got the institutional enthusiasm, the amazing technology, but also, significant regulatory hurdles and those ever-present risks. Thank you so much for joining us on this exploration today.
My pleasure. And maybe a final thought for you, the listener, to mull over. As these digital assets continue their journey, moving from niche tech towards mainstream finance, the ultimate test, I believe, will be how well they actually address core human needs. Things like trust, security, genuine opportunity. So the question is, what role do you see these innovations playing in the future of our global economy? Something to think about. Keep exploring, keep questioning, and definitely keep learning.